Martin. I am a real estate investor, real estate coach, real estate, I don't know, fanatic, if you will. I've been investing in real estate for only about 3 years now, but I've actually facilitated, I think 60 deals at this point, including my own real estate and my wholesaling company. So I've actually grown one of the largest companies in Canada for wholesaling real estate. And what that really means is we actually lock up private off-market deals, pre-negotiate the contract in terms of its price and its terms, and then we bring that contract to you. Okay, so that's how we approach real estate from a wholesaling business. So if you guys are unfamiliar with the term wholesaling, really what it is you're getting access to off-market properties that we've pre-negotiated. And to Rebecca's point, a lot of what we do is actually testing out a property and essentially underwriting it to fit fundamental investing strategies. So one of the things that you guys need to be aware of if you're looking at potentially purchasing property in the future is that you need to have a dialed in goal. And so what I wanted to talk to you about today in terms of actually funding these deals, because I will offer financing on any one of our deals, as well as any deals that you guys are looking at that are either on market or deals that you've sourced yourself. So what I wanted to offer you guys today is a discussion on us about actually getting these deals funded. And then for anybody that's serious and actually thinks that they're going to be taking action within the next 12 months or so, I'm going to offer you guys in our follow-up email to this talk a free half-an-hour call with me where we can go sit down, actually talk over Zoom and go through your finances, go through your actual financial position and create a plan for you to be able to buy more property in the next year. So that's what I'm really looking forward to getting into today. But it starts with the fundamentals, okay? You've got to know what you want. You've got to know your why. You've got to know what real estate investing strategy you actually want to approach before you approach your financing. Okay, so what I always suggest for people is take some time and actually think about what it's going to take for you to have a successful real estate investing career. Does that look like a certain number of cash flow? Does that look like a certain amount on a flip? Does that look like a student rental or a short-term rental like a cottage or an Airbnb property in the city? You need to get a firm understanding of what that successful deal is going to look like for you so that we can talk about the various ways that you can go ahead and actually fund the deal. I am also a mortgage agent, so that's how we'll generally be funding these deals is I'd be connecting you through the broker channel to any of the various lenders that we have access to. And I've done millions of dollars of loans in the last year or so of doing this. And there's many, 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 many ways that we can go about getting you financing. But generally speaking, on rentals, you're going to be looking at 20% down. Okay, and this is often one of the things that holds up a lot of people when they're starting to think about getting into a rental property, because a lot of people want to use insured mortgage products. And that's fine. But the only problem is that once we start talking in rentals, we're really looking at that 20% down typically. Okay, now there's ways we can get around that. There's different types of lenders out there. So I really wanted to just bring to your attention today the idea of A lenders, B lenders, and private lenders. Okay, and I have access to all of them. In fact, I've done loans through all of them on all types of properties, whether it's single family, multifamily, or large commercial buildings. And I've lent on every channel, and I've done a lot of private lending myself with my own capital. Okay, so typically we're looking at 20% down. And for a lot of you, if you've got great stable employment and you actually pay your taxes, unlike most of our fellow business owners out there, you might qualify for A-level lending even on your rentals. Okay, just today I got a mortgage commitment in for one of my staff who I'm actually getting financing for, and we got her a mortgage commitment at 2.04% on her rental. Okay, that's pretty extravagant rate for a rental property. It's actually probably some of the cheapest money that we've seen in many, many, many years. Okay, and that's on a 5-year fixed. Okay, so she's guaranteed to be paying that rate for the next 5 years. Now, it might not be an option that's suitable for you if you're looking into doing flips or if you wanted to refinance right away and do what we call the BRRRR. And the BRRRR method is where you buy something, you renovate it, you rent it out at the new higher value, higher rent. Then you go ahead and refinance it to recapture some of that money that you invested into the property. And typically when we do something like this, we're actually adding more value than we're spending. Okay, it's an interesting concept, but quite often you can take $5,000 of renovation money and turn that into $10,000 of value on an appraisal. Therefore, we can get that money back when we go to refinance the property for that 80% loan to value. Okay, we go and recapture back 80% of the new higher value of the building after we've brought it to its highest and best use. So it's really fascinating if we do strategies like this that allow us to recycle and preserve our capital. But it all starts with that initial round of financing. So we really have to get a good, solid understanding of what you're trying to accomplish, whether that be a short-term project like a flip or a short-term project like a BRRRR renovation, or whether you're just looking to buy and hold a property that's in a great area that you were looking at investing in. Okay, so we've got A-level lenders for you that will do that kind of thing. I'm talking about like the Scotia Banks, the TD Banks of the world, the First Nationals. Okay, and then we've got B lenders. For the A lenders, obviously you guys will know if we're talking about these big banks, these are the most affordable options. Okay, they're the lowest rates. That 2.04% was from First National. And we do quite like working with them because their underwriting team is a little more friendly than a lot of the other bigger banks like Scotia or TD. But they do have a high level of scrutiny and documentation. Okay, if you guys are self-employed, if you own businesses and you've been writing off most of your profits for years, we might be looking at alternative products for you to be able to get you into these properties faster. Okay, and then refinance later with a better lender. So one of the things with the A lenders that you have to understand, they have very strict underwriting criteria. Now, as we move down to a B lender, this doesn't necessarily have to mean a whole lot of added costs. There are some more fees. There are some additional points on the interest sometime, but I've just gotten another mortgage for, again, another colleague of mine from a B lender, which is XMC, and we were able to get that mortgage locked in for 3.04%. So that's really, really, really cheap money from a B lender. And we can also work with ICICI, which does 2.99% right now on 3-year terms. So these are fantastic rates that we're seeing right now from the B lenders. And these should allow you to qualify better than potentially you would have in the past with some of the higher rates that we were seeing. And with the B lenders, one of the biggest advantages is we have less documentation. Okay, I'm talking about you guys that are self-employed. I'm talking about you that are writing off a lot of your income and not necessarily paying a ton of money in taxes. Unfortunately for you guys, the government wants to get paid. And so the whole system is somewhat set up to reward those that pay those taxes and somewhat punish those that don't. So while you get all the other benefits of business ownership and all of those deductions, you will have to end up paying for it sometimes in your mortgage products. Okay, so we're looking at generally higher rates, but with more flexible terms and much more loose underwriting criteria. And then finally, we've got private lenders. For anybody that's looking to go over 80% loan to value, we're often looking at private options. Okay, it's not impossible to do this with the B lender. In fact, there's ways to do it right now where we can go 85, sometimes 90% with some of the B lenders. But more often than not, we're looking at the private side once we go over that 80 loan to value. Okay, and that loan to value is just simply 80% of the purchase or appraised value. Okay. And with private lenders, we can actually start looking at either going over that 80% loan to value or getting into projects and properties that would have otherwise been perceived as too risky for one of the bank's lending criteria. So what I'm talking about there is potentially buying buildings that are in pretty bad shape. Okay, some of these buildings, if they don't have kitchens or flooring or running water or electricity, sometimes they can be deemed unlivable. Okay, so that means when you get that building appraised, your bank is for sure not going to be lending on that. And a lot of the B lenders will run away as well. And in fact, even one of the loans that I'm working on right now, they tried to hold up the loan because a garage door had been replaced by a man door and a wall. And even though the garage is being used just as a workshop, they still don't like that. It just looks weird and it affects the marketability of the property. Okay, but that's where somebody like a private lender would be able to step in and say, yeah, I understand what you're going to do with the property. And we're going to look at your credit, your capacity, and your character. And we're going to make and collateral, and we're going to decide whether or not we would like that level of risk in our portfolio, and then make a call on the spot based on who you are and sometimes what your reputation is. So I loved what Rebecca was talking about when she's talking about the more you talk about real estate, the more you post about it, the more you expose yourself to it and the better your network is, the more you have that credibility. Okay. I'm all over the internet. If you look up my name, you just type my name into Google, you will find me on all sorts of different real estate investing channels, podcasts, and pages. And that lends a certain amount of credibility to who I am, so that if somebody wants to look me up and see if I am credible, they can go and listen to my content. They can go and see me interacting with my own projects. Okay, they can see my before and afters. They can see me running Canada's biggest wholesaling company. And that's a really interesting thing. Now, a lot of you probably didn't set out when you joined this webinar to potentially be a social media star, and that's fine too, because you can't forget that Rebecca pointed out that networking itself, actually getting out there and getting in front of people, is also one of the more important things that you can do to attract more deals. So if you guys are just looking for, one property or two or maybe five, networking will take you that distance. But if you want to gain a huge, massive portfolio, say you want 20 plus units, maybe you want 100, you're going to have to get yourself out there. You're going to have to make it known that that's what you're seeking. And we can talk over the phone or on Zoom about how we make it work with your current assets, your current collateral, and your earning potential. Okay, we can make products fit you. It's just going to be a matter of where on the scale you actually land. Okay, you might be an A level quality for lending, or you might be B, or potentially we might be talking about getting you into private loans to get you started. Okay, and that's where, if we go down, the further down this stack we go, the higher the rates become and the higher the fees become. That's when it becomes even more important to be looking at off-market properties. So Rebecca's going to take it away here in a second to show you some of the off-market properties that we have. But you got to understand that they're more powerful than a lot of people give them credit. And the reason for that is that there's so much less competition when we go out, we send out our wholesalers to negotiate these contracts. They're not competing with thousands of people on the MLS. Okay, we're not competing quite often with a lot of the big GTA money that's going to migrate its way down the 401 and start pumping up these prices. Okay, while we have been hit by price inflation, absolutely, we're still able to negotiate deals that are considerably under market value at times. And that's the value that we're bringing to you as an off-market wholesaling company. And again, to Rebecca's point, you don't need to buy through us, but just understand that when we buy off market, we're often opening ourselves up to much better deals. Okay, we're getting properties at considerably lower than fair market value. And that allows us to go and get great appraisals. And some of these lenders, whether it's a B lender or a private lender, will actually accept an appraised value, okay, to work off that 80%. So if you get a good enough deal, say for example, you get $100,000 house that's actually worth 200 right now on the market, we can sometimes go and get the appraised value and get 80% loan to value on that value and not your actual purchase price. So there's often some really creative ways that we can go about achieving this financing. And I think that all of you really deserve to get on that call with me, and we can explore what's your position, where are you at, what are you looking to do, and how can we better serve you as a company, both as lenders, but also as the providers of these off-market properties. So I'm going to give it away to Rebecca just after answering some of your questions, and you guys can see some deals. I know you want deals.
Deals.
We got 20 in the chat. Whew. That's a lot.
Got lots of questions coming.
Okay, let's get through this. Okay, so I'm going to try not to butcher that, but let's go with George. Either George or, yeah, let's go with George. Can you give me examples of rates for B and private lenders, assuming A lenders start around that 2%? Yeah, absolutely. So even we've got Meridian Credit Union offering 1.6%, which is absurd to me. But for some of our B lenders, we're generally right now seeing that 3% to 4%, somewhere inside that range for a lot of our lenders that we're working with closely. And then for privates, it really, really, really depends on your personal circumstance as well as the building that we're looking for. Okay, so if we're looking at a building that's in really bad shape in a small populous market, you could be paying as much as 10% plus 2% broker fee and a 1% lender fee. And that can go all the way up to 12%, depending on how risky the business is and what sort of cross collateralization that you can provide to help us get more collateral on that loan so that there's less risk for our lenders. Okay, so your average private is going to be somewhere between 10 and 15%. And then for our B lenders right now, we're quite often seeing between 3 and 4%. Okay, somewhere inside there. And those A lenders are like, they're crazy. They're like 1.6 to somewhere in the low twos is what we've been seeing quite often. Okay, but again, you know, as a mortgage agent, I have to like throw it out there every single time I open my damn mouth. It really just depends on your personal circumstances as well as the subject building and your assets. Okay, it's credit, collateral, capacity, character. So we got to look at all of those things when we're looking at any loan and make sure that we're actually hitting all those boxes for our actual lenders. Okay, I have a duty, fiduciary duty to both you, but also the lender, right? To make sure that their money's not getting lost. Evan's asking what the expected lender or broker fee is in Toronto, willing to have other properties with equity as collateral. So typically speaking, we collect, you know, on your average loan, somewhere between 0.75% to 2%. Okay, it's somewhere between there. Now, as you go further again down the stack into private lending, we generally collect 2 points, okay, plus a 1% lender fee. Now, if it's just a B level, a B loan, then sometimes what you'll see is our fee would be built into the actual mortgage itself. And then sometimes you'll see it's a fee of typically between 1 and 1.5% added on top. It really just depends though on how creative we have to get with you. April Simmons asking if we still pay bird dogs $1,000 finder's fee. Absolutely, we do. So for anybody that has off-market deals that you're looking at, if you don't know what to do with it and you just want us to take it down, if we end up locking up the contract and assigning it, we will absolutely give you $1,000 in cash. And if it's a building larger than 4 units, we would actually look at giving you $5,000. So we can actually get quite far up there if we're able to close it in one of our corporations that we buy bigger buildings in. Okay. And then Richard asked, there's no off-market group in Montreal. Well, I think you really should consider starting one because there's even a couple of people in Cashflow Tribe that are from New Brunswick. So I know that it's really starting to push across east, and there's no problem with hosting the party. That's what we're doing tonight, right? You're here. There was no finding and funding real estate Eventbrite tonight until we made it, right? And look at this, 60 of you were crazy enough to stick around for it. So that's amazing. And then Alexandre asked, I really need that chat with you being a beginner. Absolutely. So this is a one-time offer, guys. We're going to mail it out right after this. And I'm just going to essentially send you my application link. And then what I want you to do is fill in the application, okay, for what you're expecting to do or what you'd like to do. And after you've got all of your documents put into there, I will give you a call and give you a half-an-hour call, which I usually only reserve for like incredibly expensive coaching calls. So this is actually crazy. And it's just because I haven't eaten yet today. That I'm making this offer.
But I didn't even know that this was coming. This is a surprise offer and it's so incredible, guys. I'm going to be sending that email out, so stay tuned because we'll make sure we get you guys booked in.
Yeah, so the offer there, Raki, is I'm going to do a half-an-hour call with anybody that fills in my application. I will give you a free coaching call and I'll go through anything that you want in that half an hour. But generally, I think that it's most appropriate we go through how we use your why and what you're trying to accomplish to position you perfectly for the right type of building and the right financing opportunity. Okay. Looking forward to that one-on-one. Thanks, Hassan. 2 properties in so far this year. That's incredible. And looking to scale. That's nice. Yep. And Chowdhury didn't know that A lenders would finance rental properties. And yes, they will. Not all of them, not all the time. Again, it depends, but they will. When you are sourcing dealers when you're sourcing off-market deals, are the sellers open to a vendor take-back? We have done several deals that include vendor take-back mortgages, which is where your seller becomes the bank and holds the mortgage for you. And so we are running into those at some points, but they're not super common. So I wouldn't just be waiting around for a vendor take-back to take action. Scotia allowing HELOCs as down payments now. Larry, I'd have to get back to you on that. I don't actually know what Scotia's up to. I usually go through First Nat, but if they are, we can chat about that in our one-on-one call. Thank you, Vinod, about the value proposition. We think we're pretty cool too. Any thoughts on funding renovations? Okay, so guys, there are such things as construction loans. Okay, this is going to be more generally on the private side. If you're talking about a construction loan itself, and that's generally some of the most expensive money that you'll look at. And that's where we're going to start seeing like a lot of lender fees, lots of broker fees, and a relatively high rate. But there are some other products out there like Scotia Step, which is essentially where it's basically a purchase plus improvements product. So you can often get into that, but that's not really going to solve your initial problem of needing the renovation money, because with purchase plus improvements, you generally have to pay for the improvements and then they credit it back to you later after you actually complete the work. So it is a really useful product, but generally it's going to be most applicable to somebody that already has a large line of credit or a large capital base somewhere. How can you get a wholesaler in Durham region? Follow up with Rebecca and we'll look into it. We are branching out further east every day. Currently, we're servicing Sarnia, Windsor, Chatham, St. Thomas, London, Woodstock, Cambridge, Kitchener, Waterloo, Hamilton, and
recently St. Catharines and Welland.
St. Catharines and Welland. God, she's good. Okay, is it possible to get a full vendor take-back financing with off-market deals under your wholesaling team? No, not likely, because I'll just keep that deal if I ever saw it. But
I'm gonna snap that up real quick.
No, truth be told, though, we do sell some of the deals that we have with vendor take-back financing. Most often, though, you're not going to run into a full, and I'd have to get clarity on what you're talking about with full, but a full vendor take back to me sounds like 100% loan to value. And quite often people don't want to do that transaction because it literally will end up costing them money out of pocket to complete the transaction. And that doesn't sound like fun. So I've actually achieved, though, probably one of the coolest financing deals in history. Which is a 96% loan to value vendor take back for a 13-year term at 3%. If you can match that or beat it, I'll buy the deal. But we don't really run into those often. Matheson asks, should I get a mortgage approved before I put an offer in the property, or will I be okay to make the deal then secure a mortgage? Note, I already have 2 mortgages on 2 other properties. So Matheson, we should really talk about that in our one-on-one. So what I'd love to get a better understanding of is like, what's your current household income? What are your liabilities? What sort of collateral do you have with those 2 properties? How much equity do you have? And then what are we looking at? Okay, if we're looking at great off-market properties that are well under market value, there's often more options for financing. But if you tell me that you're looking at flipping mansions, some lenders get a little weary of that. And so therefore, you're going to have less available lenders. So it's always best to start by talking with your mortgage agent to get a great idea where you're actually going to be at based on your current total debt service ratios and your gross debt service ratios. Okay. We really want to have an idea where you're at with those. And then that's going to tell us how much cost is going to be involved in borrowing your money. Typically speaking, there's almost always a solution, but you really don't want to get yourself backed into a corner where you're finding yourself spending, you're paying 15% on your money when you could have got a much cheaper product if you just had a quick conversation with me. Are you guys finding deals in Eastern Ontario? Currently, we are not marketing in Ottawa, but you might want to reach out to Luke Boyron with Bliss Realty. He's sort of our biggest competitor, but he's a great guy. They started their business in Toronto, and I understand that they've recently moved to the Ottawa region. So I think that would be a great start for you. And they quite often market some really fantastic deals. So I would look into that. Son, if you can get a VTB around the 20 to 25% down payment on multifamily, would an A or B lender give you a hard time to finance the remaining 80? That again is going to be more of a case by case basis, and it's really going to be based on you. So if you had no income and you've got a bunch of debt and some bad credit, they probably don't want to loan to you knowing that you have no skin in the game. So again, this would be more of a case by case basis where the relationship with the business development manager at that fund or at that bank is going to be really what probably determines whether or not you get that money. Okay, Rhonda ran. That's too bad. Lauren says, I've got 2 properties and looking for more. Is it best to have them in an incorporation? This is a very long and difficult question to answer, and it's best served being answered by your CPA. So your CPA is going to give you the best tax plan that you can possibly have, and you should look for some CPA that has as many or more properties than you, and ideally more properties than me. Okay, so I've got a couple recommendations for you. We recommend using Galleon CPA. It's MIT. It used to be formerly called MIT CPA. He's fantastic. He's a real estate investor with over 100 units, and he's very, very good at structuring taxes for real estate. Okay, but you have to talk to a CPA to get that. Okay, we're almost through these questions, and then we're going to pop it back over to Rebecca because I think we're getting close. Looking forward to the coaching. Me too. Do you offer cost plus financing or rent to own for your off market properties? Generally speaking, we're not going to be doing too many rent to owns. And when we do run into the situations where they make a lot of sense, we'd often would just like to pass it off to somebody that specializes in that. So there's actually a company called Jag Properties, and they happen to be some of the best rent to own people. And so we generally, if we run into any of these deals, we would just pass it off to them. What city has the hottest market where you get the best bang for your buck? Currently, I'm loving all of Southwestern Ontario, to be completely honest with you. But if you really wanted to answer this question for yourself and for your own real estate investing strategies, you really, again, to Rebecca's point, have to start with your why. What are you trying to accomplish? Because there's going to be a different market for every type of investing strategy. And one of the things to consider is, if you're looking for cash flow, probably Toronto is not one of the best markets you could be in. But you might say that the appreciation and the amount of wealth that's been generated in Toronto by just natural appreciation makes it one of the best cities to invest in. But I would never recommend, if you were investing for cash flow, that you invest in Toronto, right? But you might also look to Toronto to do flips or something like that, where you know that there's a very high ceiling price. So the opportunity to get a property under market value, off market, or however you found the deal, would actually lead it to be a decent place to invest. But I actually really, really enjoy Southwestern Ontario. I've bought all of my properties between London and Windsor, and I love both of those cities. Now, they're both heating up. London's had extraordinary appreciation over the last 10 years, and it's not seeming to slow down. Sarnia right now, I love as a market. I love Chatham. We've seen a lot of investment in Chatham and St. Thomas. But generally speaking, like Southwestern Ontario seems to have some of the most stable real estate, right? Because we've got the Tri-Cities, we've got London as its own independent hub, and we've got the GTA right there. So there's actually quite a bit of stability built into our markets. And if you just look at London, for example, like the largest private employer in London is TD Bank. Okay, so that's a very stable business that's not likely to be hit by too much disruption when we see new technology or market changes or external factors affecting the markets. So I really like cities that can boast stuff like that. But look at Sarnia, they've just done a $2.2 billion investment in the chemical, Nova Chemicals. So yeah. Nova Chemicals has just done 2.2 billion in investment, which is going to lead to a lot of infrastructure projects, and it's going to lead to a lot of contract and full-time jobs. I think they were advertising something like 700 new full-time jobs by the time the project's done. And that's something that is absolutely massive for such a small city. So I love what I'm seeing generally in terms of the infrastructure investments, as well as that spillover from all the heat in GTA. Okay, so I'm loving that here in Southwestern Ontario. But again, you really got to ask yourself, what are we investing for? Is it cash flow? Okay, well, maybe you actually should be looking at some cities like Chatham that are much more affordable, but the rent demand is very high, leading to the rents climbing. Okay, but your purchase price hasn't quite climbed yet in the way that London has. Okay, if we're looking for a high ceiling on after repair value, then what we're going to be looking at are potentially some of the more stable and established markets like London or Kitchener or Waterloo, where we know that we can go in, and as long as we're buying at the right price and we add strategic value by replacing kitchens, bathrooms, flooring, paint, lighting, landscaping, these things will add strategic value where every dollar that you put in results in more than $1 out, and where there's no low ceiling limiting where you can flip to. Okay, you're going to be looking at comparable sales there, and you're going to find that flipping in those more established markets is probably a little bit easier than trying to get cash flow, because as you see, when people start flipping and the ceiling goes up, rents don't necessarily chase it. Okay, it takes longer for the rents to catch up to the purchase price because the purchase price is more emotional and more demand driven. Okay, the demand, the price essentially for rentals is demand driven, but it takes a lot longer. There's a bit of a bullwhip effect there. So anyways, that's my theory on that. And Windsor just announced a new Chrysler deal. Look at that. Aaron giving us updates. Let's go. Wholesale for condo property. I think we've got a condo in Kitchener right now. But okay, you guys have heard enough from my jibber jabber. Again, my name is adamjdmartin on Instagram, YouTube, Facebook, Face Chat, whatever. I'm there on everything. And I'm just going to drop it in the chat right now. Give me a follow and look forward to that follow-up email from Rebecca and I that will have the link to my actual application so that you guys can put in your documentation so that I have some ammunition when I'm talking to you. Okay, we need to be looking at the full picture. I need to understand where you're at financially so that I can make the best recommendations for you in both investing strategy and financing products.
Awesome. Yeah, I just want to build off of exactly what Adam was saying there. You got to start with your why, guys. And that's why I started the conversation with that, is that both Adam and I want to have better conversations with you guys, whether it be me having a call with you about a deal that we have off market, or whether it be you going to Adam about your finances. We want to have those conversations with you guys, but you have to put in the work and understand what your why is, and go from that top down. So if you haven't really dug deep and gotten to that point where you really have a full understanding of what your why is, I'm going to challenge you guys to actually do Dean Graziosi's 7 Layers Deep, because it is a fantastic way to really get to that next level and understand why you do what you do, because ultimately we are a reflection of our actions. We are what we do. So you need to ultimately understand why you do what you do, and then we can start building on your financial situations, on the best markets to invest in, on which deal is best for you. Because until we have that understanding, we're not going to be able to move to the next step. All right, guys. We actually have a full list of inventory that is fully set to go. So if you're already on our bars list, check that out. I sent it out yesterday because we have a few other properties in Sarnia right now. So Cobden, the one that Adam just mentioned, 232 Cobden, it's actually a duplex currently, and that one is currently rented as well. Fantastic property to get into. And then we actually have another one in Windsor. It is a single family. We just got it locked up, and we again don't even have the buyer's package. So you guys are hearing about this one first, because I literally just got a phone call from our wholesaler, Mike Nowicki in Windsor, that he has this one all locked up. So this is going to be 3587 Bloomfield Road in Windsor. It's a 3-bed, 1-bath. It was previously rented for 1,500 plus utilities. And this one, again, great opportunity to come in here and just raise the value of this property. So I'll get you more information, the specs, the income, the expenses on that one as well. But if you have any questions at all about any of the properties that I covered with you guys, any of the new ones, any of the ones on our inventory list, and you want to come and actually see it or put an offer in and take those next steps, then make sure that you reach out to me. My Instagram Instagram is here at Rebecca Lynn Matheson. You can find me on Instagram. You can also find me on Facebook, same name, Rebecca Lynn Matheson, or send me an email at deals@impactclick.com if you're interested in any of those properties, or if you have any questions about finding deals, because that's literally what we do every single day full time, is we literally find those deals. So thank you guys so much for coming out on a Wednesday night, putting your time in with us here. So I'm just going to turn it over to Adam just to close us off tonight. But again, thank you so much for joining us.
Awesome. Yes. Thank you guys so much. Again, if you want to give me a follow either on Instagram or Facebook, YouTube, reach out to me. It's at adamjdmartin. And you can also look forward to getting that link to my mortgage application as well as that call. I will call you as soon as I get that application submitted from you in my software. And I'll be able to actually talk you through a lot of the different things that I was mentioning today about the financing products, as well as assessing your personal situation and giving you the best advice that I can. Thank you guys so much. And once again, it's problems or profits. If this is your first time meeting us, somehow you found us just off the internet, feel free to check in with us again on YouTube on Matt McKeever's channel. He's my mentor and business partner. And again, we've got the biggest personal finance brand in Canada there. And we've also got the largest Canadian education company for real estate training, the fastest growing, and that's Cashflow Tribe Canada as well. So if you want to look into Cashflow Tribe, it's a great resource for you guys. It's super cheap. It's like $70 a month. You can get in there and get a lot of the different training that would allow you to better assess where you're at. Okay. You guys really need to have a good, solid understanding of where you're at and where you want to go, so that hopefully you can chase me. Okay. So thank you guys so much. And we will see you again on the next webinar. I don't know when, but it'll be soon.
It will pop up.
It'll pop up. Okay. See you later, guys.
See you guys.